We think about artists in terms of market cap, turnover, appreciation rate, volatility, Sharpe ratio. We think about all those metrics at an individual artist market level. The top 100 artists are 64% of the value of the art market overall.
All right. Hello, fellow data nerds. My guest today is Scott Lynn. Scott is the founder and CEO of Masterworks, the first company to securitize art. Masterworks manages almost $1 billion in art assets and has nearly 900,000 investors on its platform. Scott's a multi-time founder. I've known him for many, many years. Prior to Masterworks, he founded companies in online gaming, advertising, fintech, including AdKnowledge and many others. So Scott, welcome to World of DaaS.
Thanks for having me. I didn't realize this was described as a data nerd podcast.
Oh, totally. Yeah, we're going to dive in. We're going to really dive into the data stuff. And actually, the first data set that you're uniquely qualified to talk about is just data about the art world. First of all, how big is the art world for people who don't understand it?
Yeah, so I use this analogy to help people understand how big the asset class is. But you can think of art, and that's really art owned by private individuals. So art that is not owned by museums as a $1.5 trillion asset class. And the comparison for people is typically venture and private equity, which is a $3.5 trillion asset class. So you have a very large market that I think most people are generally unfamiliar with. There's 6,000 firms that help people allocate to venture and private equity. There's really only us in the art market today. So I think we're in the very early stages of seeing this asset class evolve over time and being more investable.
And I imagine it's a bit more opaque where it's hard to track how things are going. Is there a simple pricing transaction database? Is there where you can track all these things somewhere?
Yeah, so this is what's super amazing. So it's not opaque at all.
Oh, okay.
And this is one of the things that really attracted me to the asset class when I first got involved with it. But half of the art market trades at public auction. Sotheby's and Christie's are the two largest auction houses. Yeah. And Sotheby's has been around for 275 years. So just internalize that for a second.
That's longer than the United States.
Yeah, so prior to Sotheby's going private on the New York Stock Exchange, they were the oldest listed company. Art has been trading at public auction before financial markets even existed.
Wow! So
you have this data set which has been reported for at least decades. I mean, our data goes back to 1960s, 1970s. I'm sure there were people that were sort of tracking and assembling data before that. But you have this data set that goes back decades, maybe centuries, on how much different paintings were selling for over time. And that's really the basis of our research team, is using paintings that sell at public auction to understand how different artist markets perform, how prices appreciate, even how we think about simple things like volatility in the art market.
Yeah, so basically 50% of art, let's say over $1 million, gets sold through these auction houses or something like that? Or how does, and I assume maybe under that it's sold at galleries and those types of things? Or?
Yeah, so there's two different things in the art market. There's something called the primary market, which very simply are paintings sold for the first time. So that's always through galleries. Okay. And then there's what's called the secondary market, which are paintings sold for 2 or more times, typically at auction.
Got it. So primary, you're buying it directly from the artist, or with an intermediary, and secondary, you're buying it from the buyer. The artist may or may not even be alive at that point.
Yeah, that's right. So when we talked about $1.5 trillion total value of the asset class, out of that, roughly $60 billion turns over every year. Half of that, approximately, is through auction.
Got it. And I don't even know what to think. Is 60? If I would have thought about it ahead of time, I would have said 60 billion is smaller than I would have expected for. Or how do you, when you came into this, was it smaller or larger than you would have expected?
Yeah, I mean, it's interesting because I think if you think about that as a percentage of turnover on $1.5 trillion, it's whatever 4%, 3% turnover every year. I don't know how that necessarily compares to other asset classes like real estate. I think it's probably slightly less, right? I think people probably own a home for less than whatever 30 years.
Yeah, for sure.
But I don't know precisely. Like in the art market, we tend to talk about something called the 3Ds, which are death, divorce, and debt. Like that's typically when people sell paintings.
Hello, fellow data nerds. If you're enjoying this episode, please hit that subscribe button. I would super appreciate you being a subscriber to World of DaaS. Now, back to the episode.
So a lot of these paintings exist in families for decades. Sometimes they exist in families for multi-generations. And that probably to a certain extent drives the lower turnover.
And like when most people have these, like if you bought this like very expensive painting, are people like putting it in their house to show it off, or do they just like keep it as an investment in some sort of like airport, air conditioned airport warehouse and never actually see it, and just kind of have a sense that they kind of own this asset somewhere? Or do they like loan it to a museum? Like where do they actually put the asset?
Yeah, I mean, so those are known as free ports, where at least non-U.S. citizens typically tend to store a lot of those works outside of the U.S.
And that's for tax reasons or something.
It's for tax reasons, yeah. And even Masterworks, like we buy paintings and we hold them in high-end art facilities in the state of Delaware because we avoid sales and use tax. And that's a material portion of the overall cost. So if you can avoid that from an investment perspective,
because the sales tax is like 8% when you say like, or something like that. And wow. Okay. So you want it, that could be very, very high percentage of the transaction.
Yeah. So in New York City, it's over 10 between city and state, right? So that's a huge.
Got it. So even if I bought it in Delaware, if I like move it to my home in New York, all of a sudden I have to pay this like 10% tax or something.
Yeah, you would pay use tax at that point.
Oh wow. Okay. So that becomes pretty pricey. Big percentage transaction.
Yeah, and a lot of collectors don't really care about that. I mean, I would say that the majority of people are buying these multi-million-dollar paintings and they're hanging them in their home, and they're keeping them there for long periods of time. But there's definitely collectors who view art as an investment, and they own hundreds of paintings, and they can't keep them all in their home, so they keep them in storage.
Got it. Okay. So is there a whole, I imagine there's a whole business of insurance around these things too, right? Because they're very unique things that could be very easily damaged.
Yeah, that's true. It's interesting because insurance on art is actually not that expensive. I mean, we have one of the very few kind of multi-billion-dollar insurance policies through Lloyd's of London. But you would be surprised what insurance on art costs. It's generally somewhere in the 20 basis point a year range for larger collections. And the primary reason it's so cheap is that you can't really steal a painting. And if you think about that, the reason you can't steal a painting is because if you steal a unique object, and then you go to resell it, the resale value is nothing because the person
you could have a fire, you could have a someone could be moving it and could damage it. There's probably a lot of other things there, right?
Yeah, I think it's primarily young kids in houses that
exactly, or throwing something or whatever. But I mean, 20 basis points, that's my home insurance is roughly 20 basis points as well. And obviously a home is much more susceptible to problems. So I would have thought a painting would be lower than 20 basis points.
I don't know. In general, we view that as relatively inexpensive for the reasons we talked about, right? Like someone can bump into it, a kid can throw something at it.
Yeah. Okay.
But yeah.
Okay. Got it. And then, so and how do I find, if I wanted to know who owns every Picasso painting, is there a good database that tracks the current owners and stuff?
I mean, we do that at Masterworks, but there's not a good public database that tracks that. And there is something.
Because even when the prices happen, you don't always know who the buyer might be anonymous or something.
We don't always know. Yeah, I mean, we have an entire team of over a dozen people that are just focused on buying paintings. So they're reaching out to thousands of people in the art market, collectors as well as intermediaries, to try to understand who owns what at different points in time. But there's not a good way to know that today.
And besides for these 3Ds, death, divorce, and debt, is it just generally people might sell for general portfolio management, because and those would be more like the investors who might sell something, just like they would sell a stock or sell a company or something?
Yeah, I mean, people who trade art, whether that's dealers or whether that's very large collectors who have these, $100 million plus collections, they're obviously focused on, returns. So they'll sell just for profit.
In a painting, there's no like revenue stream on a painting usually, right? Like, I mean, maybe, I don't know, maybe will a museum pay you rent for your,
there's really not. I mean, there's been lots of startups in the art market that have tried to create income by renting paintings, and I would say in today's world that hasn't been successful so far. And museums have access to so much art in general.
Right, they have so much in their basement. They don't. So people almost that's like a way of like increasing your value by donating to a museum for a year or something, right? And then gets shown, and then maybe you increase your value. So, is there like could you like get the image rights and people could, I don't know. Is there any other way to like make income, or because if you own a stock, you can lend it out. Or obviously if you own real estate, you can get rent. But like a painting just kind of like, it just sits there for a while, right?
It's really just capital appreciation.
Okay. Got it. And so like, how do you analyze a painting? Is it really just like exactly what you said, like looking at the past data and having a sense of, okay, Picasso's are only going up 2% a year, but Jackson Pollock are going up 8% a year on average. So that's a better, like, is that the way, or how do you think about it?
Yeah, it's a super interesting question. So when we started Masterworks, and the business has been around now for a little bit over 5 years, we actually didn't know how much art appreciated. So we had all these general ideas, and there were all these different reports sort of talking about kind of what different people thought it appreciated, but there wasn't a really good index methodology that was tried and true to understand truly how much was art appreciating. So we created the first what I would consider high quality index to track art market performance, and we based that index on something called Case-Shiller for home price indices. Yep. So that's a methodology that's used to understand how real estate prices are appreciating, and that methodology basically relies on an individual home that's purchased and an individual home that's sold, the return on that particular transaction, and then over the course of thousands or tens of thousands or hundreds of thousands of transactions, interpolating an index based on those individual returns. So we applied a similar methodology to the art market using public auction data. So we would look at a painting that was purchased at public auction, the same painting that was subsequently sold at public auction. We collected over 150,000 individual transactions, and then we interpolate our index from those transactions. And the thing that was so crazy about that was that, and again, this is only a little bit over 5 years ago, there's no API, right? There's no way for us to actually pull that data from any system to record it. So we hired, I can't even remember, 30, 40, 50 interns, and we bought thousands of paper auction catalogs, and we had them go through and record individual events of paintings that were purchased, and then they found the painting that was subsequently sold.
But does a specific painting have like an ISBN or something so you could track it and know, or does it you have to actually like code it in yourself?
I mean, generally speaking, you can use an artist name and you can use the title of the painting.
Okay.
There's lots.
I'm sure the titles might change. Sometimes artist names might be spelled differently, and whatever.
Yes, it's super messy. So there's definitely lots of issues like that, including that a lot of artists just have paintings that are untitled, which is probably the biggest issue. But we spent millions of dollars basically creating today what is the first reliable index on the art market, and that had never been done before. So you just think about that in concept, and it's pretty crazy that you have an asset class that's that big, that does that much transaction volume, and there was no reliable indicator for how much it was appreciating.
And then I imagine you found out that like impressionists were not going up as much as modern. I don't know. I'm sure you found out like interesting ways of like making your investments or something, right?
Yeah. So the very first thing that we discovered, which is I think really really fascinating, and most people in the art market still don't understand this today, is that the older art gets, the less it appreciates. And
we would think like maybe they would have been the opposite, right? Like that would be my non-obvious. Like that's non-obvious to me. I would have assumed it was the opposite going into this.
I think a lot of people assume the opposite. Like a Rembrandt is appreciating faster than whatever a Picasso.
Yeah.
But the opposite is true. Now, the other thing is that more recent art also has higher volatility.
All right. So it can go down faster.
So it can go down faster. So the predictability of
because it's a fad.
return,
Like you have a sense like a Rembrandt is always going to have some sort of market. So it's like a safer asset. Maybe it won't go up that much, but it won't go down that much. Whereas maybe a newer artist it's more like a growth stock or something.
Yeah, and I think our best hypothesis as to why that is true is that appreciation rate tends to follow fashion. In our world, in the art market, fashion moves in very large increments, right? It moves generationally, it moves over centuries, but it still changes. And what that means today is that if you decide that you want to spend $10 million on a painting, you probably don't want to hang a Rembrandt above your bed, right? You probably want to hang a Basquiat above your bed or something that just feels more contemporary, feels more of your generation. And when we look at the data, that's what we see. So we see contemporary art appreciating, art created after 1970 appreciating at 12, 13% a year. Modern art appreciating at I would say 8, 9% a year now. Impressionist art appreciating at 6, 7% a year. And old masters appreciating at 1 to 2% a year. So over the course of a couple hundred years, you had old masters, which were very fashionable, obviously appreciating very quickly at that point in time, slow to inflation-like appreciation rates in today's world.
Okay, interesting. And I mean, obviously, there's also a transaction, like buying it from an auction house, you're going to have a pretty high transaction price that you're giving to Sotheby's, Christie's, et cetera, right? So from an investment perspective, it becomes even worse. If it's appreciating 1% a year, it's really negative appreciation at that point, right?
Yeah, I mean, there's no question that transaction fees in the art market, I think, are a problem for investing in general. I mean, at Masterworks, we've had to kind of engineer our way around a lot of that. Like,
you're going to buy directly from the seller or something.
Yeah, working with collectors directly, avoiding sales and use tax, really getting down carrying costs on things like.
What is like a Sotheby's charge on a typical transaction or something?
It depends on the price of the painting, but if you're a typical collector and you walk into an auction house and you're buying something that's over $1 million, you'll generally pay, on average 12 to 15% in total commission after rebates, et cetera.
So the buyer pays?
This gets complicated and it's a little bit of a rabbit hole, but there's technically a buyer's commission and a seller's commission. Almost always, if you're a big seller, that commission gets waived or eliminated. So there's
really? Okay.
Yeah. So there's really just a buyer's commission. And then if you're consigning something and you're a big enough client, a portion of that buyer's commission will get rebated to you as an incentive to consign, which effectively reduces the net commission that the auction house charges. So it's a complicated construct, and I think in general it's not. We would probably say it's not good for the art market. Like I think a lot of these complicated transaction fees inhibit new people from moving into the market. And probably discourage investing generally when transaction fees are high.
And then even within so I assume because you're basically creating like kind of like index funds and other types of things to help people invest well, help even the average investor invest well. Like you're trying to invest in the safest, highest growth thing possible, right?
Yeah. So we think about artist markets just like you would think about any asset class. So we think about what is the risk adjusted return, meaning what is the appreciation rate divided by the volatility. And what's referred to as a Sharpe ratio in most asset classes, we look at Sharpe ratios in individual artist markets. And the higher the Sharpe ratio, generally, the better, the better we think of that artist market.
And so I assume there are points where you are a seller. You're not just a buyer, and you're selling at the point where essentially, like the only reason you would sell is if you feel like the appreciation is no longer in the future is no longer going to look like the past. Is that correct?
Yeah, I mean, that's generally correct. I think that decision is is a hard decision, and we have a data science team that has created basically ML models to try to understand what do we think the future MOICs or the future appreciation rates of these artist markets. What do we think they'll be? In today's world, those ML models are governing more and more our decisions around selling. If we think an artist market is decreasing, or if we think it's declining, based on that ML, then we'll start selling.
One of the things it's interesting to me about these markets is if you own enough of an artist, you have an incentive to market that artist broadly, right? And so in this case, like if I own a bunch of Apple stock, like it's going to be hard for me to move the needle to help Apple. I could tell my friends that Apple's amazing, but it really won't really change like their earnings very much. Even if I earn billions of dollars of Apple stock, it really won't do very much. But if you own a bunch of art, if you own 10 paintings of a cool artist, you can start, even whether they're alive or dead, you have an incentive, a real incentive to start marketing that and buzzing it up and et cetera. And to increase appreciation of, I know a lot of like early collectors try to do that. Is that still applicable at your stage, at the later stage?
It's not applicable at our stage. I mean, there's definitely people that try to make markets in the art market. And I would say that almost every very major artist today, very major living artist, has had someone help them make their market throughout their career, whether that's a gallery that's bought things for inventory, whether that's a large art collecting family that has commissioned a bunch of paintings and then tried to get them to sell for a lot at auction. But at our stage, that it's not really a scalable strategy. We're more interested in how do we provide kind of predictable double-digit returns.
You can't get it into a movie or get people talking about a particular piece, or you get the New Yorker to write a new profile about the artist or something like that.
Yeah, I mean, that game is typically played at kind of the $50,000, $100,000 a painting price point.
Okay, so once you're $20 million painting or whatever, it's like it's not happening at that point. It's not happening. The audience and reputation is what it is at that point.
It is what it is at that point. Yeah.
Okay, interesting. And what else is like non-obvious about the art market that like maybe the average person would understand?
Well, I mean, I think when we think about the art market qualitatively, we tend to think about this call option on the top 1%, right?
Yeah.
So if you just sort of break down allocating to art as an ultra wealthy person, you can think about it like this: most blue chip paintings cost over $1 million. If you want to buy a Rothko costs whatever, $30 million. A Basquiat costs $20 million. A good Picasso in today's world costs $20 million. So if you start thinking about a portfolio of art, you're probably spending somewhere between $50 and $100 million to have a good art collection.
Right.
Now, if that art collection represents whatever 5% of your net worth, you now have to be over a billionaire.
Yep.
So when you think about what is driving prices in the art market, it's really wealth creation at the top 1%, right? It's the number.
In this case, it'd be the top 0.01%.
0.01%. Yeah. So these are new billionaires coming out of China.
Yeah. So 1%, the 1% Americans' net worth is a little over $10 million, maybe $10 to $15 million would be like the top 1% net worth in America.
Yeah. I mean, it's people like Jeff Bezos moving into the art market, which he has been recently, and buying $100 million paintings. The Qataris, previously buying $100 million plus paintings. So the market is very, very correlated.
When someone does that, like, why do they do that? Like, are they doing it just so they can brag to their friends that they have this thing? Like, because at least with a yacht, you kind of like enjoy. Like, if I create a fake paint, a replica of the painting.
People do enjoy paintings, though, Auren.
Well, but if I had an exact replica of your favorite painting, like no one would be able to tell the difference. I could still enjoy it just as much. Like, it's just the fact that it's the real thing gives me so much more enjoyment of it and stuff.
Yeah, I think it's owning something that is culturally significant, part of art history. Yeah, I think that.
The same reason people buy any type of collectible or any other type of, is it owning like the original writings of Da Vinci or whatever it might be?
Yeah, but I would say too that the collectors, I mean, take a large collector like Steve Cohen, for example, is obviously a very, financially motivated guy. He has one of the largest art collections in the world. I think if you asked Steve and you said, hey, do you intend to lose money on your art collection? I think he would say definitely
Absolutely not.
right?
Yeah.
Like he's doing it for investment. He may not be able to quantify,
but almost
exactly.
certainly like he would make way more money of just leaving that money in his hedge fund. Like it's really doubtful he makes more money on art, like as a percentage, than on his hedge. He's been so successful. He compounds so much faster there, I would think, right?
I think that's right, but I think it's also probably just one of those dynamics where, like, I know, which is, as an entrepreneur, you have so much risk in your core.
Yeah, that's a good point. It's a diversification, and also he likes it, right? It's fun.
Yeah,
I assume that's like one of the big motivators. It's enjoyable to talk about it and learn about it.
I think so, and I think a lot of people like him kind of get addicted to collecting at a certain point. I mean, I don't know how many paintings he has, but my guess is he has 1,000 or more paintings.
Yeah,
that's
just like you buy sneakers or something. It's like, oh, okay, yeah. Or some people collect old cars or whatever it might be. Everyone has a different kind of hobby that's out there. Is like, how does the macro affect? Is it in a ZERP, is it going to go up more, or is it not going to go? Like, how's it affect? Is it correlated to stock? Is it anti-correlated?
Yeah, so we do a lot of research on correlation. In general, art is not correlated to almost every major asset class. The highest correlation is actually with gold, which tends to be around 0.1 or 0.2.
Oh, wow. I'm surprised it's so low correlated.
Well, I think the reason it's lowly correlated is that there's a couple of reasons. So one is that there's a few unique characteristics about the asset class. One is that you can buy a painting in New York, you can put it on a plane, and you can sell it in Hong Kong.
Yeah.
So it really acts as this almost neutral currency that you can sort of move between different countries at different times. And we see that a lot in practice. Like, for example, we have the largest collection of Banksy. If we want to sell a Banksy, we're probably going to sell a Banksy in the UK rather than in the US.
Because in the UK prices are just higher.
There's more demand in the UK. We generally think we can get higher prices. So I think that's one reason, is that it's not country dependent. Any particular economy at any point in time, if the U.S. economy is horrible,
okay, got it. So it's like a global index, which is less volatile or something.
It's global and less volatile. The second thing that I think is very interesting, and we've spent a lot of time trying to understand, is that it's one of the few asset classes where you have continuously decreasing supply in major markets. Meaning, once Picasso reaches a certain point where everyone knows who he is, everyone wants to own Picasso.
Yeah.
One of the things that naturally happens is that collectors, throughout generations, wind up donating those paintings to museums.
Yeah, so it just keeps going. It's like Bitcoin becomes harder and harder to get.
Yeah, but unlike Bitcoin, it actually starts decreasing, right?
Yeah,
it starts rapidly decreasing.
Yeah.
Like one of the examples I use is Jackson Pollock, the drip painter in mid-century America. So in today's world, there's 21 Jackson Pollocks left in private collections. Most of those paintings,
only 21.
Only 21.
Oh my god!
The exception of those paintings, there's probably only 2 that are really A paintings. Most are B paintings or C paintings.
So why is something an A painting versus a B painting or C painting?
Just an example, right? Like a great example versus not really a thoughtful, smaller executed painting. So even a B or C example of a Jackson Pollock in today's world is $30 million because there's 21 left.
There's only 21 of them. So if you want to own a Jackson Pollock, you got to pay up.
That's it.
Okay.
Yeah. So that I think that's a very unique characteristic. I mean, when you look at other asset classes like gold, there's more gold mined every year. There's more companies started, more houses built. But in the art market, you have a vast majority of the market that's really concentrated in these top 100 artists, and the supply for those artists is shrinking every day.
Okay, got it. That makes sense to me. And there's been a bunch of lawsuits recently against the auction houses. Some of them accusing them of taking advantage of their customers. Some of them, accusing them of manipulation. Are there any truth to these accusations? How do you think about that? Yeah,
there's definitely truth to it. And the unfortunate thing is a lot of this this sort of revolves around fiduciary concepts that I think are misunderstood in the art market. So, for example, in the state of New York, if you're my client and I tell you that hey, Auren, I have a great Jackson Pollock for $30 million. I think you should buy it. I have a fiduciary obligation to you, and I need to tell you how much I'm making on that transaction. That almost never happens.
It could be like a side thing where you get paid more or, whatever.
Yes.
Okay.
And this is usually the origin of all these lawsuits, which is that I sell you a $30 million painting.
Which you bought for 15 or something.
I'm secretly making $10 million on the side.
Yeah.
You find out about it and we wind up in a lawsuit. And you almost always win that lawsuit because the laws are pretty clear
in
around
the state
that.
of
But
New York.
But the art market doesn't really operate understanding those laws, unfortunately.
Sometimes you read about these things where there, like the CD side, there's money laundering going through it. There's other types of things. Like how much should one believe that, and how much do those affect price?
Yeah, that's really not the money laundering comment. I mean, you do hear that sort of in popular press, but it's really not true. I mean, there's KYC rules in the U.S., in Europe. It's very, very hard to launder money with art. Now, I think laundering money can be broadly defined. Like we did see at certain points of time where a lot of very wealthy Chinese were trying to move money out of China. Yeah, I wouldn't call that money laundering.
Gotcha. So just because they were also buying like Manhattan real estate, and
right.
So it's just a safe asset they could store somewhere else, and even if it appreciates not as much, at least it's fungible, and they can get access to it.
Yeah, I think that's right. Yeah.
Okay. That makes sense. And you guys are already like the largest buyer of in the art world, right?
Yeah, because if you think about the art market today, it's really families that are buying and selling.
Yeah.
Right. So we're really the only institutional like firm that's trying to kind of make this an asset class that people think about from an investing perspective. So our competition is really families in today's world.
And how much art are you buying every year or something? Is that public or?
Yeah, it's not public, but depending on the month, we'll buy anywhere between $30 and $60 million a month.
Okay, $30 and $60 million a month. So that let's say you're buying like $50 million a year of $500 million a year of art or something.
Yeah.
And you're saying that that 60 billion changes hands. So you're still a very, very small percentage of
small percentage.
Okay. Less than 1% of the market.
Yeah. It's still a very small percentage.
Yeah. Is there a point where if you got to like 4, 5, 6% of the market, like all of a sudden you're distorting prices and stuff, or?
Yeah. I mean, we don't, I mean, it's an interesting conversation. So I'm not sure, first of all, that's a bad thing, right? Because if we go into an artist market and we have thousands of new investors that we're introducing to that artist, and those investors are inherently driving up prices, I'm not sure that's a bad thing.
Yeah, because some of them may appreciate it later and become collectors on their own, or
and they can sell their securities, they can invest in new paintings.
Yeah.
So there's I think we're sort of building investor markets for these artists independent of the collector markets. So I think I'm not sure it's necessarily a bad thing, but today we're not more. I think the biggest concentration of any artist market is we're 10-15% of that market in terms of transaction volume. So still relatively small.
And you mentioned some of these whales like Jeff Bezos, Stevie Cohen, like have the personality or the prototype of these whales changed over the last X number of years?
I wouldn't really say so. I mean, the personality tends to be just these multi-billionaires that come from different industries, different countries, all pretty diverse backgrounds. But those are the really big collectors in today's world.
And I assume there are years where the art market has gone down or something like that, just like any asset class. Like, what is the reason for it to go down?
What we usually see, and we've seen this over the past 18, 24 months as well. When there's concern from collectors that art prices are going down, they don't sell. It's
Okay.
like one of
It's just like
our
real
biggest,
estate's like that sometimes.
just like real estate. Yeah. So one of our biggest challenges, I think, over the past couple of years with the current economic climate has frankly been that collectors aren't selling. So we see transaction volume go way down, even if prices don't necessarily go down.
There's this weird sense where it seems like everything in the world is becoming like Vanguard, where you have this Vanguardization of everything and you have an index of everything. In some ways, you're driving that in the art market. Like, how do you think that plays out? Like because you can think of all these other collectibles like art or baseball cards or something. And then of course you could have like real estate and you could have all these other types of things. Like, do you think we just get there in like all the major asset classes?
Well, I mean, I do think that probably happens for a lot of major asset classes, but I think things like baseball cards are not, I mean, I say this a lot, and I would even say this about cars, that they're just not expensive enough to securitize. The total value of a baseball card is not high enough to justify the cost of securitization in today's world. And that's definitely true in the US. I mean, the regulatory framework that we operate
But can't you
under,
buy securitize 1,000 baseball cards or something, like collection or something,
you could, but then like as an investor, I can just buy one of those 1,000 baseball cards, right? Like I don't
and just
really
feel
need
like
to,
you own it. Okay.
yeah.
Okay.
I can just own it. So I mean, I think that's one of the things.
So if a baseball card sells for $20,000, like, well, any high net worth person could just buy it, and and they could pay $24,000 if they really want to own it or something.
Yeah, and I think that's generally what we see happen with things like baseball cards and watches and wine and like all of those asset classes. I think people struggle with like, why do I need to invest in it if I can just buy it myself?
But I mean, I could buy one share of Apple stock. Anyone, that's pretty easy to go do and stuff like that. But I still invest in like an S&P 500 because I want like a low cost basket. Obviously, buying, and stock is very cheap to buy. The transaction fees are really, really low, so it'd be easy. But still, I still invest in the S&P 500. Whereas like these collectibles, there's high transaction costs. It's hard to get. You have to take care of it. You have to manage it yourself. So if I really want to like get an option on the baseball card market, I don't know how I would do that today.
Yeah, and we have seen there's been a lot of asset managers that have approached us to add art to kind of a general collectible strategy.
Yeah.
I think a lot of those general collectible funds haven't really gotten that much traction. One of the challenges is that when you look at collectibles broadly, art is 80% of the value of all collectibles. Things like wine, baseball cards.
So the 1.5
card.
trillion is 80% of all collectibles.
It's 80%. Yeah. So it's all of those other things.
I had no idea that the other collectibles were such a small percent. So all the other combined is just 20%.
Yeah. And that's
wow.
I mean, but think about that qualitatively, right? Like your most expensive painting is $450 million.
Yeah, it's true. Okay. There's nothing even close to that, right? There's no like wine. I assume there's $1 million wine bottles, right? Or
I'm not a big wine guy. So
neither am I. But I'm sure someone's paid $1 million for. I mean, I saw someone once paid $1 million for a tuna fish. So I'm sure that someone has paid $1 million for a wine bottle.
I was in Tokyo recently, and I walked by the restaurant of that chef that bought that tuna fish for $1 million.
Okay, yeah, exactly. I'm sure it was really good tuna. Like, I'm sure it was amazing. And what like if you had do you think of like artists by like market cap? Like, would you say, okay, this artist has X amount of market cap or something?
Yeah, definitely. Yeah, we think about artists in terms of market cap, turnover, appreciation rate, volatility, Sharpe ratio. We think about all those metrics at an individual artist market level. And that's the reality, right? Like if you look at someone like Basquiat trades $200-300 million a year, has several $billion in market cap.
Basquiat, one artist is $200-300 million a year.
Yeah. I mean, Picasso.
So 0.5% of all transactions in dollars are Basquiat.
Yes. And the top 100 artists, I always tell this to parents who have children who want to become artists. The top 100 artists are 64% of the value of the art market overall.
And by the way, that's top 100 include a lot of dead people too.
Yeah, and I was just going to say,
it's like the top 100 athletes today are all living, right? So maybe Muhammad Ali still makes a lot of money or something. But
yeah, out of the top 100, the majority are not living. So it's really, the career as an artist to actually become a very successful living artist in today's world is very, very, very difficult.
Interesting. Okay. That's, and, like, is this something like, how did you get into it personally? Is this just something like you were just kind of collecting on the side and then like got passionate about it?
Yeah, I mean that's basically it. Like I always thought it was a very interesting asset class because it was so inefficient. And I still think that's the same thing today, right? Like you look at most asset classes and they have very smart people who are, very sophisticated at figuring out how to invest in them. And you just don't have that in the art market today, right? It's really us with our kind of research team and our data science team that are competing with families who are buying paintings, and obviously families don't have the resources to kind of build the same infrastructure that we have. So, my experience was I started collecting in my early 20s. Built an important collection over 10, 20 years after selling companies that I had started, and saw the value of the collection go up, and thought, this is a really interesting asset class, but there's not a good way to invest in it. So that was the origin of Masterworks.
In some ways, like it's kind of like a REIT, right? Except you don't make rent on it.
Yeah, there's no income dynamic.
Yeah.
In our model today, people are picking and choosing individual paintings to invest in. So we don't offer fund products today. So that, that's different as well. But,
good point. Okay. So because they're passionate about a specific type of painting or something like that.
Yeah. I mean, we publish all the data on these individual artist markets when we launch new paintings to invest in, which we do now about every day, every other day. And people kind of build their portfolio through us launching new paintings.
And there's other models. There's like a company called Fundrise that does something similar in like maybe a much lower dollar for real estate. Like, how do you think about all these other companies that are in some ways very similar to what you're doing, probably going after similar types of investors?
Yeah, it's really us and Fundrise. So Fundrise focuses on real estate.
Yeah.
They just launched a venture product as well. But it's, in terms of scale, kind of at the $1 billion plus level, it's really us and them. We know those guys well. I think they're very smart. I think their investment products are actually
in their case, I think their main revenue is just like they take a small management fee. I don't think they have a carry on it. They just take a management fee. Do you guys have like a similar model or?
Yeah, for us, we have carry. So it's 1.5% management fee and 20% carry.
Okay, got it. So it's like a fund.
It's like a fund. We also have secondary markets where people are trading shares in these vehicles. We're not a broker dealer today, so we don't earn commission on those secondary market trades. But that is.
So if I spent like $20,000 to get into if I'm a small investor in one of these things, and then and now it's like you deem it worth $24,000, I could sell that to somebody who wants to buy into this painting or something.
Yes.
Okay.
Yeah. And I think I think for us, that's really important because we currently tell people to think of these as long-term illiquid allocations, right? If you're investing in a painting, think of this as a 3 to 10 year investment. And that's still one of the bigger obstacles for most investors. So the secondary market really helps address that objection of otherwise having to wait many years to receive a return.
And in Fundrise's business, fairly familiar with them, like really anyone can invest in it. Like, I don't think you don't have to be like a qualified investor, but I imagine with you, do you need a more sophisticated investor of a higher net worth to be allowed to invest or?
No. So all of our products are public products. So anyone can invest. If you're interested in investing, we onboard you with a conversation with a financial advisor. Who's non-commissioned. They have a fiduciary obligation to make sure that you're making good investment decisions. So they'll recommend particular paintings, particular allocations. Most of our investors start with less than a 5% allocation of a portfolio to art, and they grow it over time.
Okay, got it. Interesting. This wouldn't be like a tech thing if we didn't like mention like NFTs and stuff like that. Like, what's your take on like the NFT market?
Yeah,
it's obviously a highly speculative market.
Yeah, it's a complicated question. So historically we were always sort of the outspoken anti-NFT people, and I don't. There's nothing that we technically have against NFTs. Meaning, like we still think that NFTs could be interesting down the road. But I think the objection that we have to investing in NFTs is the data is very messy. Meaning we've tried to do index construction on NFTs similar to how we do index construction on physical art, and there's a lot of NFTs that go into marketplaces that never sell. There's a bunch of wash trades on the blockchain, which make it difficult to tell when things are actually transacting. We could just never get comfortable with how much are NFTs appreciating and what is the volatility of NFTs. And if we can't understand those two data points, then for us, it's hard for us to recommend it as part of an asset allocation
you mentioned
model.
You have data going back, well over 50 years. And so you can make some sort of like smart decisions on it. Like NFTs in some ways is like a momentum trade too, right?
Yeah, I think it's a momentum trade. I think it's just highly speculative. And for us, we have a lot of people investing with retirement accounts. We're a regulated business. So it's never really been anything that we could get into.
Well, beside for art, like I'm sure you've gotten this question before, you've talked to people, like what else, and obviously with real estate, like what else do you think will be done in this way where you could have lots of small investors buying into something? Obviously people have talked about DAOs, they've talked about other ways of doing it, but what other categories do you think we'll see that happen in the future?
I think it's really hard. Like I struggle with a lot of these businesses that are trying to do this, like we discussed with lower price point objects, just because I know how complicated the regulatory framework is. We're also very skeptical, I think, of anything that has a security that's quote unquote traded on the blockchain, like a lot of these STOs or securitized token offerings. And the reason we're skeptical with that is we know regulators very well. And we actually think that the SEC is moving further away from approving things like that rather than becoming closer to approving that. So, in general, if you think about the criteria of something to securitize, I think it has to be something that in today's world is not on blockchain. I think it has to be something that has a high price point. I think if you really want people to invest in it, you need to have enough data to show that it's appreciated historically.
Yeah. What about like a sports team? Obviously, it'd be very hard to buy like the Chicago Bulls or something because, and obviously that's a very high price point. But like a minor league sports team, I don't know what they trade for, $20 to $50 million or something.
Someone actually approached us about securitizing volleyball teams. I don't know anything about that, but I think something like that is potentially interesting. Yeah.
Yeah. Or, exactly. A pickleball team or something like that. Yeah. Okay. Yeah. I could see a lot of different types of things out there, and it makes sense. And especially if you believe like this manager is going to manage it well, in some ways that it's kind of more like a REIT where like you have to believe in the manager managing it. In a REIT, like you have to get your rents, so there's like a business to run. It's not just an asset. In your case, like you could be putting it just in an air conditioning vault or something, and so it's a little bit easier to they don't have to like believe how well you are as a manager. They just have to believe that you're a good picker.
Yeah, I think that's right, and I think that is the challenge with with businesses, even with real estate to a certain extent, right?
Yeah.
Like you've got to actively manage a lot of that.
Oh yeah, absolutely. Now, is there a couple personal questions? Is there like one like white whale piece that like what is something like you'd just love to own?
It's a good question. So we don't. So the artist market, I would say that in terms of expensive paintings that we like the most, continues to be Basquiat. That market just continues to perform very, very well. 16, 17% appreciation for the past 25 years with lower degrees of volatility. So I think Basquiat in general, we tend to gravitate towards. Now, interestingly, we don't.
Why is it like why Basquiat? Why is that? Is it just because somehow the marketing just got it right, and like why did that happen?
Man, it's just,
or is it just lightning in a bottle, or?
You talk to every billionaire of the painting. There's I would say people who have had a lot of money for a while definitely want to own a Basquiat. Interestingly, we hear new
because it's like there's something about like the marketing, and it's like that's the best bragging point to, obviously like best bragging point would be like I own the Dallas Cowboys or something, right? That's like number one. But then like number two is like I own this Basquiat painting or something. Or
I think that's kind of right.
Okay,
I think that's kind of right.
I just move up the social hierarchy.
But the other artists we're hearing
I'm going to just start
more
telling people I own a basket and see what happens.
The other artist that we hear a lot of now is Banksy too, for people who are newly wealthy. That's kind of we can see that being the next phase. I don't think, we're not.
And
quite
these are both
yet,
very famous. Like, I don't know anything about art. I personally don't own any art, but I've heard of both of these, painters. So even a complete dummy like me, it would impress me if someone owned Basquiat or Banksy.
Yeah, and I think that there's definitely bragging rights to it, and most people that are buying it, again, they're buying it not exactly knowing how much it'll go up in value, but believing that it will go up in value regardless.
Yeah. Okay. Interesting. All right. Two more questions we ask all of our guests. What's a conspiracy theory that you believe?
A conspiracy theory that I believe. I'm not a conspiracy theory guy.
I don't know. Really? Okay.
So I don't. A conspiracy theory that I believe. I don't know how to answer that one. What would you say to that?
Well, I mean, in some ways, art seems like it's filled with conspiracy theories, right? In a way, right? It's probably there's probably like this cabal somewhere who's like managed to get this specific artist, like really, because it's just assume it's just a fad. It's not like certainly like one better than the other or something. If once you get art above $10,000, like it's pure marketing, it's brand, it's that amazing. It's like Hermes or one of these LVMH, but like to the next level, right?
Yeah. I don't know. I don't know how to answer that one. What's your second question?
All right. Well, the last question we ask all of our guests: what conventional wisdom or advice do you think is generally bad advice?
That's an interesting question. I was talking to someone this morning about, I guess just inflation over time. We often get these questions about, is art an inflation hedge? How do you think about it as an inflation hedge? And I think common wisdom still continues to be that the U.S. dollar is a good store of value. And it's really interesting. I don't know if you've done this or if your listeners have done this, but if you just go to Google and you Google how much has the U.S. dollar lost in purchasing power over the past 100 years, what do you think the answer to that is?
Well, if inflation was 2% a year or something.
So it's pretty crazy. So the U.S. dollar has lost 97% of purchasing power over the past century.
Yeah,
and inflation is actually accelerating rather than decelerating compared to those early kind of pre-World War II periods.
Yeah, and also in some ways, you could say until very recently at the maybe at the lower end of the spectrum, there's been somewhat deflation, but on the higher end of the spectrum, which is where your investors probably spend most of their money, there's been massive inflation because we've seen, increases in real estate, increases in vacations, increases in education, increases in healthcare, often 3x the rate of inflation there.
Yeah, so I think when we think about investing broadly, we have to think about what does that mean for our portfolios, and how do we allocate? Do we think about real assets? To some people, do you think about Bitcoin? How do you think about those trends in inflation over the next several decades? Because I think inflation on an individual annualized basis doesn't matter that much, but when you start compounding it in the future, it does get concerning. Especially,
I imagine a lot of people in art, like these are people who think about things for like generations too, right?
Generations, yeah.
This has been awesome. Thank you, Scott Lynn, for joining us at World of DaaS. I follow you at Scott Lynn on Twitter. I definitely encourage our listeners to engage with you there. This has been a ton of fun and super interesting.
Thanks for having me.
Thanks for listening. If you enjoyed the show, consider rating this podcast and leaving a review. For more World of DaaS, and DaaS is DAAS, you can subscribe on Spotify or Apple Podcasts or anywhere you get your podcasts. And also check out YouTube for videos. You can find me at Twitter at Auren, that's AUREN, Auren, and we'd love to hear from you.